Hi everyone, and thank you so much for watching my channel, The Witty Turtle. And in today's video, we are going to start with the first section, that is section 36, subsection 1, clause 9. Okay, so this particular section speaks about whether the expenditure on promotion of family planning is allowed as a deduction or not. So the answer is yes, it is allowed as a deduction. So first we need to understand what is this family planning. So हमारे दो वाला scheme is known as your family planning. So this particular section came into force when Indira Gandhi was the prime minister. So this section is basically applicable for all the companies. So what used to happen, the government used to tell companies that if you promote family planning in your company amongst your employees, then the company is going to get certain deductions, right? So any revenue expenditure incurred by a company for the purpose of promoting family planning amongst its employees, then deduction is 100% allowed. Okay, deduction is 100% allowed. The first condition to this is that the SSC must be a company. It must be a company. The second point says that the revenue expenditures are 100% allowed. And the third condition says that if you are making any capital expenditure, if you are incurring any capital expenditure, then that particular capital expenditure will be allowed in 5 equal installments in 5 consecutive years. 5 consecutive years. So now you must be thinking, in the expenditure for promoting the family planning, what can be the revenue expense and what can be the capex? So revenue expense is like, for example, if you are bringing any doctor, if you are getting any doctor on board to educate your employees on family planning, then that is a revenue expenditure. But if you are establishing any hospital or establishing any small nursing home for promoting this particular thing, for to operate the surgeries and all, then in that case that is known as your capex, right? For example, just to make you understand, if your company is establishing a hospital to promote this, and the capex on that hospital is, let's say, 1 lakh rupees. Okay, let's say 1 crore rupees. 1 lakh is a very small amount. So 1 crore rupees. So what happens? For 5 consecutive years, every year 20 lakh will be allowed as your deduction for capital expenditure. But similarly, if you are spending 5 lakh rupees to get any doctor on board to educate your employees, then that is a revenue expenditure, and that will be allowed 100% in the year, in that particular previous year itself. Understood? I hope this is clear. Similarly, another point here you need to understand is that unabsorbed family planning expenses are similarly treated as unabsorbed depreciation, right? So this section is over. Now coming to the next section, which says that the amount of STT paid, the amount of securities transaction tax paid by the SSE is allowed. Okay, but it is allowed in the case where the following conditions are satisfied. What is the first condition? The first condition is that the SSE has entered into a taxable securities transaction in the ordinary course of his business. The second point says that the income derived from that taxable securities transaction is taxable under the head PGBP for the SSE. Okay, and the third condition says what? It says that the SSE has held the shares or the units as stock in trade in his business. He is holding the shares or the units as stock in trade in his business. So if all these three conditions are satisfied, then the amount of STT paid by the SSE will be allowed as a deduction under section 36, subsection 1, clause 15. Clause 15. Okay. What are the three conditions? The first condition is that the SSE has entered into a taxable securities transaction. The second point says that whatever amount of income is derived out of that taxable securities transaction is taxable under the head PGBP. Okay, and is taxable under the head PGBP, or you can simply say that that income amount is added in the PGBP income. Okay, and the third point says that the SSC must held all those shares or all those units as stock in trade in his business. If all these three conditions are satisfied, then what happens? The amount of securities transaction tax paid will be allowed as a deduction under this section, right? The next point is very similar. The next point is speaks about CTT paid, that is your commodities transaction tax. Okay, so in this case also this CTT amount paid will be allowed as a deduction in the business, but again the same three conditions are applied here. What is the first condition? The condition is that the SSC has entered into a taxable commodities transaction uh, in the ordinary or in the due course of the business. The second point is that the income derived from such a taxable commodities transaction is added in the PGBP income. The third point says what? The SSC has held the commodities as stock in trade of the business. If all these three conditions are satisfied, then what happens? Then the amount of commodities transaction tax or CTT paid by the SSC will be allowed as deduction under section 36 subsection 1 clause 16, right? I hope this is clear to you. So whatever we have studied till now, I really hope that you have understood everything very well. And since the last class of bed debts was a very long class, so I am keeping this class very short. And in the next class, we will study another concept, and after that, section 36 will be over, right? Yes, if you find this video helpful, then please hit the like button, subscribe to my channel, The Witty Turtle, and also don't forget to hit the bell icon so that tomorrow you'll be notified when I'll upload a new video on my channel. And yes, if you find this PGBP revision series very helpful for you, then do share this video with your CA and CMA final friends, and do write the same in the comment section below so that I'll be motivated and I'll upload more and more videos.